now that we've completed the financial statements for 2011 for Garvin's Construction, we're ready to start 2012. And we're going to basically, I want to point out something I've done here. I look back at the other video and there's some computations I need to make so you can see that I added, this is a little bit different than in the last video. I had to update it. And basically what I added here was a line item for profit to recognize in prior years. Because if you remember, our percentage, think about this, our percent that we can compute is the percent complete to date. So at the end of year, when we calculate this percentage at the end of year 2010, it was or 2011, it was 6.25% complete. When we go to calculate it for the next year, it will be the percent complete at the end of that year. Okay, but that's in total for 2 years. So then we need to subtract out the amounts we recognized in the prior year to get the amount to recognize in the current year. Hopefully that'll make sense as we go through, and I had to add one line item here, right here, for profit to recognize in prior years that I had forgot to put down there. So let's walk through this and let's see if this makes sense to us then. And I also ran out of room then, so I had to, that one very, very last line item, we compute cost of construction. That's not on here anymore, but it's a plug in our journal entry anyway. All right, so our contract price in 2012, it's still $10,000. That didn't change. Now, if I look at the facts, our costs in the current year were $6,000. My costs from the prior year were $500. So my total costs that to date that I've spent on this contract are $6,500. My estimate to complete is $4,200. So my total costs to complete this contract are $10,700. That now means that my estimated gross profit on this contract is a negative $700. At this point, I want to calculate that percent complete also. And if you remember what it is, it's how much we've spent to date. So that's $6,500. Divided by the total estimate of what we're going to have to spend, $10,700, and that gives us our total percent complete at the end of 2 years. Okay? So you can, the other way to think about this is subtract out the 625 from the 6075, and that would give us, what is that? 5450. So this is the percentage that was completed in year 2012. Okay? So this is the amount of revenue and everything else we're going to compute. Right, but I'm going to stick with our same methodology here because I want to make everything flow. Now, when we have this profit, the one thing you're going to have to recognize is when we have a loss in percentage of completion method, we recognize the entire loss immediately. We don't take a percentage of it. We recognize all of it now. And if we stick with this formula that we're going to subtract out the estimated profit to date, so to subtract out that 125, then we have to, profit to recognize in the current year is 825 negative. Okay, so think about it this way. If this was a baseline, last year we recognized $125. Now, in this year, we're going to say we need to recognize we need to be at $700 below the baseline. But to get us from the 125 positive down to the negative 700, we have to recognize an entire loss of 825 in the current year. Okay, our contract price is $10,000. We are now percent complete is 60.75. So the revenue we want to recognize in the current year is 6,075, but I've already recognized 625 in prior years. So the amount of revenue that I'm going to recognize in the current year is 5,450. So those are the computations for the year 2012.